Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. We've just released our monthly India Market Outlook titled Stay the Course. In today's podcast, we summarize our key views. First, a quick performance summary of the past month. Indian assets rebounded as risk sentiments improved, with commodity prices correcting amid a resumption of foreign investor inflows into domestic equities. The RBI delivered its third consecutive hike and raised policy rates by 50 basis points in its August 2022 monetary policy meet. Over the last month, the Nifty index is up 8%, while the Nifty Midcap index is up 9.8%. The INR recovered from its all-time low of 80.06, though still depreciating by 0.5% against the USD, while the benchmark 10-year Indian government bond yield was down 7 basis points to 7.31%. So given this backdrop, what is our outlook for asset classes going ahead? In our view, market volatility is likely to remain elevated in the short term as market worries shift from rising inflation to weakening global growth. However, we continue to prefer equities within a diversified asset allocation because of the following reasons. First, economic indicators continue to signal above-trend domestic economic growth. Bank credit, railway freight, and EV bills rose in the month of July 2022. The unemployment rate fell to 7.4%. Manufacturing and services PMI remained strong in the month of July, and GST collection rose to 1.49 trillion in July, remaining above the INR 1 trillion for 12 consecutive months. The second driver of our constructive view is the earnings, which is the most important driver of equities return in a mid-cycle transition, and it remains robust and ahead of major global peers. In the ongoing first quarter FY23 earnings season, earnings has been in line with expectations, with over 80% of the Nifty companies reporting so far. 65% of the reporting companies have met or beaten consensus estimates. For FY23, Nifty earnings growth is expected to register above 17% EPS growth, and that is on the back of stellar 35% EPS growth in FY 2022, which was the highest since 2004, and 15% EPS growth for FY 21. Corporate earnings in India have shown resilience amid minor downward revisions despite multiple headwinds. The third driver for positive view are the bond yields, which are factoring in lower terminal policy rate amid easing inflationary expectations. Though the RBI's August monetary policy was mildly hawkish than market consensus, market expectations of further aggressive tightening measures has eased, given that RBI acknowledged receding inflationary pressures by retaining its inflation forecast for FY23, aided by some easing of global supply constraints, and also remains flexible and data dependent, with future policy actions likely to balance inflation targeting and sustaining growth. Moving on to individual asset classes, Indian equities remain our most preferred asset class on a 12-month horizon. Above-trend economic growth and resilient earnings expectations are key drivers for equities. Within equities, we prefer large-cap equities over mid- and small-cap equities on a relatively better macro fundamentals and greater margin of safety in terms of earnings and valuation. We expect the value outperformance to broaden in 2022. Our key investment themes, India's investment revival and broadening value rotation, are likely to benefit in a mid-cycle environment. Now, bonds remain a core holding or neutral, as above-average yield premiums are counterbalanced by weak fiscal dynamics and worsening government bond and demand-supply balance. Rising interest rates is another headwind for bonds. Within bonds, we retain our preference for short maturity bonds, given lower sensitivity to rising interest rates. Cash remains a core holding, and finally gold, which also remains a core holding and a good portfolio hedge against inflation and equity market volatility. That's it in this edition of the podcast. Do reach out to your relationship manager for a copy of our India Market Outlook. And thank you as always for listening. If you like this podcast, please like and subscribe.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered relationship manager or visit www.se.com/in.